Hello, everyone. It's Stephen Whiteside here from the uptrend.com. And in today's presentation, we're going to take a look at the Magnificent Seven stocks. Now, the Magnificent Seven, of course, is a subset of the NASDAQ 100. And we'll start off by taking a look at that index and keep track of the major trends that are going on. Now, the NASDAQ 100 has been on a weekly sell signal for 5 weeks now, and it ended the week down just under 2.5%. Now, previously, we were looking to see if the $500 level would hold. That, of course, is a big round number, and it was resistance back in 2024, so we were expecting it to act as support in 2025. And if that support broke, then our next mathematical target to the downside is 468.75. And we got there a couple of weeks ago and came back to that level on Friday. On Friday, we closed at $468.94, so 19 cents above our price target. Now, if the low from 2 weeks ago is taken out, then our next target to the downside on the weekly charts is $437.50. Now, a lot has changed in a very short period of time. In 2024, we were in a bull market. The market was making higher lows and higher highs. Investors were willing to buy all the dips. In 2025, things have changed dramatically. We're now entering a bear market. The market is no longer willing to buy the dips, and now we're making lower highs and lower lows. So the emphasis is not on what you can buy in 2025, it's what you can sell. Now, we were expecting a rebound here. We came off the top of the panic zones. We came down to the bottom of the flypaper channel. A pressure zone had formed. That's the time and place you look for a buy signal. But again, buy signals in 2025 are not the same as buy signals in 2024. And we were looking for a rebound. That rebound, we had all kinds of targets. We had our mathematical price target. I was looking up 2 lines to $500. We were also looking up to the flypaper channel. Remember, last year, the flypaper channel acted as support. This year, it's going to act as resistance, and that's what it did. We're also trading from below all the moving averages. So on the way back up, those moving averages act as resistance. And not only did the NASDAQ 100, but the Magnificent 7 ETF got caught on the 200-day moving average and has now come back down. And now we're looking to see if the recent low that these particular ETFs made can hold this week. Now, it's easy enough to see what emphasis the Magnificent Seven stocks had on the NASDAQ 100. This week, the NASDAQ 100 was down 2.47%. The equal weighted was down a little over 2%, 2.09%. So you can see the NASDAQ, the Magnificent Seven stocks certainly had some weighting to the downside for the NASDAQ 100. And if you just take out those stocks alone, they were down 2.71% on the week. So yes, those big cap tech stocks were leading the markets lower. Now, neither the NASDAQ 100 or the Magnificent 7 ETF saw the pros come back and take control during this little upward movement that we had. Now, Apple is the only company at the moment that is still on a buy signal. That would change on Monday if Apple were to close below $217 or $31.60 on the TSX. We do have Amazon back on a sell signal on both sides of the border. We've got Broadcom on its third day of a sell signal. Now, I was rooting for Broadcom. It was trading in the channel for over a week, and I thought it would be the first one to take off to the upside, but that's not what happened, and we've taken out the recent low. So that's a very bearish sign for Broadcom. Then we've got Alphabet back on a second day of a sell signal. We've got Meta back on a sell signal as of Friday's close. We've got Microsoft. Now, Microsoft is trying to hold support at 375 in New York or at 2734 in Toronto. And of course, if those levels break, you can see the targets to the downside. We've got NVIDIA on its third day of a sell signal on both sides of the border. I'd be very shocked if NVIDIA breaks $100 in New York. That would certainly be a very negative sign for the market going forward. Shopify now back on a sell signal on both sides of the border as of Friday's close. Then looking at Tesla, Tesla's still on a buy signal here. We need to close on Monday below $250.91. It did run up to the 200-day moving average and started to pull back. In Toronto, we're looking for a close below $22.64 on Monday to give us a sell signal. Now, looking at the daily panic zone chart for Tesla, you can see we peaked back in early December, and that's our last early warning signal. None of the upward movements that we've had over the past few months have been enough to generate an early warning signal. There just hasn't been enough of a bounce. We had several opportunities here where the pressure zone was telling you that, yeah, this is the time and place where we should expand to the upside. And we were certainly projecting higher prices here, but that's not the type of situation we're in for Tesla at the moment. Now, compare the panic zone chart to the NASDAQ 100. Our last early warning signal came in the middle of February. We had a nice run down to the bottom of the panic zones, pressure zone formed. Again, things are changing from last year to this year. This year, we're not expecting a huge run back up to retest the previous highs. We were just looking for a reaction bounce. When we go to the weekly panic zone chart for Tesla, you can see the last early warning signal. We're still projecting lower prices here. And, in the middle of that range would be about $125. The 2024 low was $138.80. So if we start breaking down below these levels of support, then 138.80 would certainly come into play. And you can see that the first thing that would have to happen is we take out the low from 2 weeks ago. If that were to happen, that would certainly head us towards the $138.80 target. Okay, folks, that's all for this weekend's presentation. The emphasis in 2025 is not what you can buy, it's what you can sell and when you can sell it. If you don't know how to short stocks, then you should learn to use the bear ETFs because that's where you're going to get the biggest bang for your buck in 2025. Enjoy the rest of your day. I'll be back later in the day to take a look at the weekly charts. And if you don't catch that presentation, then I'll see you on Monday morning.
Thanks for tuning in until the very end of today's stock market timing educational video. If you found the content valuable, don't forget to express your support by hitting the like button, leave a comment, sharing with your friends, and subscribing to our channel for more insightful updates. Remember, in the world of stocks, timing is crucial, and following the trend can be your greatest ally. If you would like more information on how we can help you better time the stock market, please visit theyuptrend.com.